We're going to explore navigating in tough times when the stock market is in a bear market and very unstable. So stay tuned for the full episode. Welcome back. This is Richard with Wisdom Investor. We're going to explore this topic here, navigating the stock market in a bear market. Now, one thing to understand during a bear market, surprises are to the downside. Also in this channel here, we discuss Social Security, when to retire, investing for retirement, how much you need to save for retirement, and much more. During a stock market bear market, surprises are typically to the downside when information is released like employment data, inflation data, or earnings. Good news is perceived as bad news, and bad news is also perceived as bad news. Now, when we start to see a turnaround of bad news then turning into good news, then the market starts to react to the upside. But in a bear market, surprises are typically to the downside. Now, I'm going to show you what I'm talking about. We're looking at the Nasdaq 100 QQQ. About a week ago, our indicators were indicating that we would get a possible bounce in the markets. And we did get that bounce. A couple of days later, we had the employment data come out. It really wasn't that bad, but it was perceived as negative, and the stock market took off to the downside. Again, surprises are to the downside. We're looking at the S&P 500 weekly chart going all the way back to 2013. Now, if you're in the market right now, you need to ask yourself, what were my goals or why I'm in the market? If you're trying to navigate this bear market. Now, if you've been a long-term investor and you've been writing this up over the last 5, 10, 15 years, this recent downturn, nobody likes it, but it's part of the nature of the stock market. The market moves up, and then there's profit taking that takes place. Now, if a person is a recent investor, and maybe they bought in at the highs here, this can be devastating to see the market drop 20 to 30%. Nobody likes that. Now, for some positive news here, you can see the S&P 500 over the last 10 years has had dips in the market, but typically they end up recovering. Now, the thing is here, we don't know how deep this dip is going to be. Now, for the person that has just retired and they need to pull out money from their investments, pulling money out during a downtrend, that can be detrimental to your savings because two things are happening here. One, you're pulling money out, and two, the market is dropping to the downside. So this can deplete your savings a lot quicker. So this is something to be concerned about. Here's a chart of the bear market in 2007, 2009. Now, if you notice here, the maximum drawdown was 57%. I'm not saying we're going to have a 57% decline here, but what I wanted to look at here is during a bear market, you can get rallies. And you can see we had 11% rally here, then a 7%, a 12%, then a 7%, then we had a major drop, then we had a 24% before we had the final drop, then the market recovered. Now, I can't tell a person when they should get out of the market. I will say this, the best time to get out of the market, if you're going to do that, is do it after we've had some type of a bounce in the market. We will get some bear market rallies along the way. So we can get bear market rallies to the upside in a bear market. But remember, surprises are typically to the downside. Now, news and earnings that are coming up this week. These could also lead us to downside moves. We have the consumer price index coming out on Thursday, so we'll have to watch that. Then we get into the earnings. We start seeing earnings from companies. What's going to be important here is how the markets react to the earnings news. Now, the first few legs down in this market were pretty much caused by the high inflation and the interest rates rising quickly. Now we get into the period of time when earnings are being announced. Is the high inflation and the rising interest rates going to affect earnings? So we're going to have to watch that real close here going forward. Again, in a bear market, surprises are to the downside. Now, down the road, we'll eventually get bad news, but the market will react to the upside, and that's a possible trend change. So I want to thank you for watching here. If you have any questions, leave a comment. I want to thank you for watching here today, investing in the stock market in a bear market and how to navigate the tough times.